Okay, so this is Shaozar Forex. This is the first video on the YouTube channel, and I will be giving insight into my strategy and actually performing it live on a demo. So let's get stuck in. You might have seen from the thumbnail today, we'll be talking about indexes. Actually, my whole strategy revolves around indexes, because indexes represent the true belief of a market. If you try and trade a macro or a fundamental, especially in this state of the market with Trump, you might find a little bit of doubt with your strategy, even if you are well versed in fundamentals, because you're trying to be right. The market might move away from the fundamentals, and it does quite often. So that's why I use indexes. We'll go through this quickly. So 4-hour on the dollar, we're still bearish. This is my custom indicator. I'll make another video on this in the future. This is the first video, so yeah, if you are opening trades right now, obviously I don't give financial advice, but I personally will not go bullish on the dollar just yet. We'll wait for this 4-hour to go bullish. On the 1-hour though, we are starting to see the dollar start to pull up. This is kind of signaling that the risk regarding Trump, regarding China and tariffs is kind of falling off. You can still short the dollar. It depends on what you're shorting it with. If you're shorting the dollar with the Swiss franc, that's probably not going to go well, and we'll see why. So the dollar, the 1-hour, we're starting to go bullish. We are actually on the verge here of going bearish, and I'm going to wait for some confirmation of that. Maybe some breakout of this level here, or I might just get greedy and start trading. It depends what you're really pairing it against. Euro, we've got a level here preemptively, probably to do with the 1-hour. We're going bullish on the euro. We have been since February. Makes sense. If you go and look at the charts, let's say euro against USD especially, we go out to February. This would have been a good time to buy. You would have made money. That's the power of indexes and what my channel will be covering. So if we look at the index, I mean, it's almost the same, but go to the 1-hour. We are starting to see that bullishness fall off. Will we have an incident like here where it jumps up? I'm not sure, but likely I think it will. This gap up here, we could have a similar thing. We gap down, we could gap up. I'm waiting for it to go above this resistance level, really, for me to go back bullish. I'm just a bit cautious with this right now, with the euro. Japanese yen. Japanese yen, we had some slight bearishness, so I fell off. But we're starting to go bullish. So that's worth noting. We've been really good bullish on the macro. We were bullish. In time, I'll explain what this whole thing is. I don't really mind sharing this because who cares? I'm not Warren Buffett, so yeah. Japanese yen, strong macros. Now we had a brief bearish pullback, but we've gapped up. Will this hold? I don't know. Let's say this level, I'll be bullish again, or I'll get greedy. It depends. CXY. See the Canadian dollar on the 4-hour, bullish. 1-hour, not so bad. Still contracting. We're seeing this bullishness kind of drop off a bit, kind of like here. But, pardon me, clearly more so here. It's clearly dropping more so here. W formation. My opinion on the CAD, yeah, it's bullish. Depends what you want to trade it against. We'll get to that. So, DXY, British pound. British pound on the 4-hour, bullish, very nice. We're actually doing pretty well here. On the 1-hour, yeah, I wouldn't mind. This isn't a bad trade. I wouldn't mind going long on the pound actually. Now that I'm looking at this, we're riding the yellow. Yeah, maybe I'll consider that later on. Macros on the pound aren't great, but they're not bad either. I'll have a look into that. Yeah. You might think what I'm doing here is just looking at a chart and reading an indicator, but You know, this is surprisingly effective. It's actually hilarious how good indexes are. I'll explain further in the future, but you have rogue waves at sea, and that happens when you have waves interfering with one another. Superposition happens, creating noise, or in the sense, a wave that's 50 meters tall and can wreck a ship. In this case, that superposition might wreck your stop loss. It also might make you call bear on a currency which is actually bullish. Um, and superposition happens when you have two indexes overlapping, and all of a sudden you have incredible noise. You see, none of the indexes really look like this. CAD JPY, look at this noise. This is superposition pretty much of the index. Calling bullish or bearish on this is incredibly hard. But if you call it off, say, let's see here, I'm just going to do this quick demonstration. Incredibly bearish dollar on the 1 hour. Incredibly bullish yen on the 1 hour. We go to the USD JPY. There's a bit of superposition, a bit of rogue waves. But in general, you would have, you've eliminated the noise, and you're not going to all of a sudden go bullish on the flip here. That's why indicators, indexes are so useful. Indicators not so much. Indexes just show you the market in a different perspective, but and my indicator here, it does not lag, as you can see. It doesn't lag. It's based off EMA percentage differences and a zero line as a result of EMA differences. I'll explain this. I'll probably make it public. Who knows? So we were at BXY. Yeah, so we're bullish on the 1 hour and the 4 hour. So yeah, go bullish on the pound. What's after that? The AXY. So we're ranging on the XY. I've actually drawn this preemptively. We're actually bullish on the 1 hour, but this is a strong level. 1, 2, 3, 4, 5, potentially 6, 7, 8, 9, 10, 11. The amount of times it's bounced off this recently. It's gone. Look, if we go to the 4 hour, it seems we've gone from one big range, that was slightly going upwards. We drop down, we're doing a small range, which could be, this one could be slightly going upwards as well. We're yet to see. So waiting for a breakout. Now this is what you've probably seen from the thumbnail. ZXY. Look at this. We've broken out of this like slowly increasing range. Clearly a bullish range with higher highs. You had a lower low, but it seems to be a fake out, maybe caused by noise, Trump tariffs. But in general, this structure has been going on since start of 2025, and look how much the Trump tariffs affected it. Not much. And this is I'd consider this a risk on currency. Depends on trade. I think you buy lamb and milk from New Zealand. So look at this bullish rip here. It doesn't really show any signs of going bearish. Even when we dropped here to near the zero line, that's a pretty comfortable distance relative to the past. Price seems stable. It's kind of flatlining, but flatlining, if you're buying two levels here and you're going bullish, you might win. So I'll definitely be bullish on the New Zealand dollar for sure. SXY. This is now actually. We had our bullish run. Trump tariffs hit here. Incredible stretch to the upside. February, we actually saw the US dollar starting to turn, which is interesting. Well, actually, maybe even a bit earlier. Was this January the 25th or 16th? You could really say that started to turn. So if we go to January 16th, you could have even got in similar position here. But obviously you were still red on the SXI. You'd have wanted to go bull and bear on that trade maybe around about here, which is 18th of February. If we go to USD CHF at the 18th of February, and I started to call bear on this because of the index and my indicator. This isn't an indicator show off, by the way. I really don't care about indicators, and I'll never sell them. I'll never sell a course. This video might only get 10 views, but I really want to stress on how great indexes are. reducing noise and providing the real signal. You don't want to be inferring signals from pairings. From what I've found with currency trading. Um, we'll be testing that on our Shawzar demo from Awanda. But yeah, you could have been going bearish on all of these pullbacks here. There's one. There's a lot of opportunities to go bear here. And only here, it seems you would have probably got striking out. Here you might have and this is on the 4 hour. I mean, you go to the 1 hour and all of a sudden, look at this. You might have had several opportunities to win here. You know, you might have had you might have got pardon me. You might have got struck out here, maybe struck out here, depending on how, your R2 are, but you might have got struck out here. But on the rest of these downward moves, you would have, I mean, yeah, opportunities, great. So we've done the indexes. What am I looking out for today, going into tomorrow? DHF JPY. And the reason is because the yens went red and then it's gone bullish, kind of confirming the bull. But it's not, the macro is strong on the yen right now, and their rate, divergence in rates. Yen, Japanese bank are going to increase their rates throughout the year, 2 years, and the Swiss franc will probably lower theirs. They might, I don't know, they might make, with the yen and with the franc, there's a chance of intervention from the banks. Oh, boring. Anyway, I'll spit it out. There's a chance of intervention because of the Forex, because of the, massive purchase of the franc. Maybe with where the USD JPY is going, there may be certain levels which the Bank of Japan's looking at. I don't know what they're going to do. And honestly, I don't care because I'm just going to trade with the index anyway. So, yeah, I'm looking for a pullback here. Oof, look at the spread. What the hell is going on there? A lot of indecision. Given this spread, I actually might increase. I might back off this zone. I might go here just to buy me a bit of room. We'll see. If it's 10 o'clock, I doubt we'll get anywhere near here in the hour. But I'm considering. I think I will. I'm going to move this trade up and 2.14. I'll explain why I go for the R2R in the future. But you're actually watching me live adjust the limit order on this demo. Pretty cool. 0.3. Because I'm comfortable. It's not an 8-year trade, this. 8-year trade for me would be yen is 4 hour, 1 hour index bullish and macro bullish, which it is. For this to be an 8-year trade, the Swiss franc has to go bearish on the 4 hour index. But the 4 hour index is currently bullish. We'll see. So yeah, so I'm looking at that. I'm looking at NZD, CHF as well. We're starting to get a reversal. I mean, look at that. On the reversal, I mean, just look at this. Look at the Zealand rip right now. Fundamentally, I cannot tell you why the New Zealand dollar is doing this. And I put a lot of effort into looking at fundamentals and recording them. Current account, trade balance, rates, GDP, COT data. I mean, look at this. But, big 3% jump on longs, but that doesn't really explain that. CPI, PPI, we're pretty much average. We're at 1 bullish on supply and demand. We're at -2 in, well, this is just my scoring system. And I used to make trades purely off this, but, recently, all I care about is indexes because clearly that's the only thing the market cares about. Belief in a price and a direction, as demonstrated here, is way more important than the Swiss franc having bearish macros. If there is demand, that demand will change the price. And what this indicator tells me, giving me an average difference between EMAs, is the belief in a movement across different time frames. So on the 4 hour, That is 1 month, 2 week, 2 days. Is that right? Yeah, 4 weeks. So a month, 2 week, 1 week, and 2 days. You divide it by 4 for the 1 hour. You get 1 week, a half a week, quarter of a week, and then half a day. And that's how it's calculating the range for the average bullishness across the across those time frames. So let me just delete. Oh, geez, where we are going here? CCHF, delete that big. Okay. Trading view. You're embarrassing me on my first video. So yeah, and then I did say pound CHF. I'm considering this. We're starting to go bullish. That's the 1 hour. Let's have a look at the 1 hour here. You know what? Actually, like legitimately, that looks like such a solid level. I'm liking the technicals here. I'm liking that. And look at this bounce back. We actually might see this tonight. This might be the easiest trade ever, but pound were bearish. This would also be a 0.3 trade. I'm going to go 0.3 on this. And you know what's funny, right? Indexes, and a lot of people look at the currency strength chart, which is useful, but it only shows you within the day. Actually, this is just reset because the day is just, GMT plus 12 is like 22. Well, I don't know. The way it calculates itself is the start of the trading day on the other side of the world is around about happening at 10 o'clock for me, which is 13 minutes ago. What we're seeing at CHF is actually showing some strength. So early to decide, given that a signal is put every 5 minutes. But yeah, what's the point in using that for strength when you can just use indexes? So you're going to watch me put on another trade here, 2.14. Very nice, very nice. And I want to put it dead middle, dead center. You never know. Look at this spread. That's why. It's new trading day. Spread's going to be fat. Tremendous spread. For price to get down here, I'm going to imagine spread's going to reduce a bit. Okay, go for 0.3. Yes. Okay, so we're sat on a CHF JPY trade, an NZD CHF trade, and a GBP CHF trade. So we're shorting the Swiss franc today. I'd like to, short the dollar like yesterday. Yesterday, I made a nice trade on the NZD USD. I bought here, sold here. I wanted to go there, but there's no point. I actually put 2 positions. You can see I just cut them both off here because I was deciding how I want to do my strategy, but I think I'm just going to focus on one level because, that could be a new level. And if I was making a trade now, I'd probably go for that. I wouldn't really care about that. So that's why I'm just going to go for one level from now on. But yeah, there you go. I'll be making videos like these probably every trading day of the week. And even though I'm a new account, if this thumbnail's got your attention and you like what I'm talking about, then you don't have to subscribe this early, but actually I'll just give you good advice. Let me give you something of value. Look at the indexes. They are way more useful than all of this. Way more useful. Fear and greed index. This is very useful. This is good for determining whether macros are important or headlines are. Extreme fear, extreme greed, everybody stops listening. Neutral, people are looking at macros. 10-year bonds, what are we doing on the 10-year bond? Oh, we're going down. I'm waiting for it to get around here. And then I'm going to make a gold buy. But it's not there, so I'm not going to. Gold ETFs, look at this. Oops. Come here. Gold ETF, we are getting into the green. So my head on ETF flows is if price leaves the ETF flow. It's a good bullish indicator. I don't even understand how this works, but it works. These shift. We're outside now, but you see how it's kind of engulfed this recently. It's been warning you that the bull run is we're getting to the end of it. Until an exhaustion happens here of the ETFs and we jump out. I won't exactly trail stops. I might still buy in a zone like this, depending on what happens here. But yeah. Okay, I think that concludes the first video. Covered the indexes. Okay, yeah, thanks for watching.